Hi everyone, I'm Ken from CryptoTradingKS. Across the weekend we did some really interesting stuff. On Saturday, how I spot potential winners, and on Sunday, how to profit from depth charts. A big thank you to everybody who watched and especially those who commented. Our community is deeply involved with active learning, and I'm so grateful that people found that content really helpful. If you're new to the channel, a very warm welcome, and you might like to look at these two videos because they provide a lot of in-depth help that can assist you. Our goal inside this community is to be and to help others become more of a financial and emotional blessing to themselves and those they love. You can see we've got a really active community, and I'm so grateful for everyone here. I thought we'd focus on derivatives today. And if we just look at crypto bubbles, I want to just give you an understanding of what's moving at the moment. Whenever you see Torn come up, it looks like there's been some kind of hack in the crypto system. But what you can always see is that there are always opportunities inside the market. It just depends on the time frame that you're looking at. Let's run the numbers. One thing that we always try to understand is investor sentiment and investor attention. That's why I show you the greatest gainers and greatest losers each day. It's really important to contextualize where the market is going. The greatest gainers in the past 24 hours: Casper, HBAR, BMB, BTT, Render, ARB, and TWT. The greatest losers in the past 24 hours: Top 100, 1inch, AGIX, APE, FXS, Fracshare, Flare, FLR, Filecoin, FIL, and Injective Protocol. I'm going to provide a link to this particular website. We look at it for liquidation data, and we can see in the past 24 hours there's been 64.53 million in total liquidations across 19,625 positions. If we look at the top 24-hour symbol liquidations, and I'm going to come back to this, we want to contextualize where the crypto market is going by looking at exchange liquidations, especially the total amount, which is this particular line. We want to get an understanding: how have the longs and the shorts been interacting? Over the past 24 hours, about 57% of total liquidations have been long liquidations. What about the past 12 hours? It increased just slightly up to 58% long. What about the past 4 hours? Oh, ay caramba, up to nearly 91% long. Why do we look at this? Why is it important? It is important. I gloss through this section because you need to know how the longs and the shorts are interacting. Why do you need to know, and why is it important? I'll just go one more step. What about the 1 hour liquidations? You've seen they've dropped from a very high level around the 91% down to around 59%. Let's call it 60%. What does that mean? More shorts are getting liquidated. What does that mean? It actually means a lot. When the longs get liquidated, that puts negative price momentum into the entire crypto market, especially as we're looking at total liquidations across every single crypto. What do we notice here, and why are we looking at Bitcoin? There's a very good reason that we look at Bitcoin. Bitcoin is currently $29,405. Bitcoin came up and tapped that smart money sell level from 29,957 to 30,166. It tapped it and retreated. Why did it do that? Because the sellers were there pushing the price down. What do these wicks mean? Why are they wicky like this? Why isn't it just a full body candle? These wicks represent rejection. When you see a wick like this, it's saying, don't go there. Don't go there, don't go there, don't go there, don't go there, don't go there. It basically says it's getting rejected. Typically, we're not great fans of seeing these upper wick rejections because it means that it's rejecting upper price momentum. We could look at the chart like this, absolutely, for sure, but when you actually combine it with liquidation data, it can be very interesting. Students of the CTKS method understand we look at structure. We don't look at just short-term price changes and price momentum. That's important, but we look at overall market structure. And we know there's a smart money sell level between 29,957 and 30,166. That's so far being obeyed. But we look also at short-term sentiment. We must understand retail sentiment. It's vitally important to know what the herd is doing. In the animal kingdom, being part of the herd is a really safe thing to do. In investing and trading, it's a very unsafe thing to do. Why is it unsafe? The financial markets are unlike anything on the planet. When you go to school, college, university, you always seek for that right answer. You know you're either right or wrong. In financial markets, you can be right and wrong simultaneously. What do I mean by that? Price is always moving in a wave. What we saw is price going down and then coming up and tapping this smart money sell level and going down. You could have predicted it would go up, then down, and also flat, and you would be correct. This creates massive confusion inside people new to financial markets. People are looking for certainty. After all, they've worked very, very hard to put their money together to put into the market. They want certainty. They want a guaranteed return and no risk. And there's plenty of scammers that will sell you on that dream, but it's just a fantasy. 4-hour videos each day, 7 days a week. We do active learning. Active learning is the key. You need to know why things went well for you and why they went badly. And it's not an easy thing to do, but a way to get more certainty. And we can't have absolute certainty inside the markets, but we can have more certainty, is to understand what is called Objective Dynamic Market Structure, or ODMS. And that was developed through the CTKS method. The CTKS method shows you where smart money is selling. Smart money is buying. When you see price come down, smart money buy levels will act as shock absorbers and potentially reflect the price up to the next smart money sell level. This is why we have to gain an idea about liquidations. For example, and I'm really drilling in here because I want you to understand, everything I do is focused at knowledge transfer. When you look at these red candles, what does it mean? It means the longs are getting hammered. They're getting hammered and hammered and hammered and hammered and hammered. But the thing is, when you get to a structural smart money buy level, and especially as you fall through a couple of them, what you'll see is price starting to consolidate. What you would have seen in the derivatives data is massive long liquidations and massive volumes of it. And what did we see? As this smart money once a buy area turn into a smart money sell area, and that's what they do all the time. They're always changing guard, always changing position. It came down, got slowed by another one, then was reversed, tried to tap it, eventually broke it. And what is all of this? You got it. This is smart money actually liquidating the shorts nearly all the way back up to where it fell from. You can see that monitoring short liquidations can give you an idea if the market is coming down and how fast and how furious it's coming down, and exactly the other way. When you see long liquidations, and a lot of them, what you actually see is something like this. Long liquidations, short liquidations. What happened here? A mass of long liquidations, but they were caught by that smart money buy level. If you were looking at the particular chart like this and you were saying, where is this going to stop? You would have a very difficult time answering that question because there's no visual guide. You could use moving averages, you could use Fibonacci, you could use Bollinger Bands, you could use anything that you want, but you really want to know the market structure. That's why the CTKS method is so powerful. You could think about it this way. If you've ever seen a higher wire act in the circus, you know that these people walking around on those wires have actual protection. They've got safety nets below them. But what if you had a high wire act like something like that, where there's such momentum and such weight and such power in this particular high wire artist? If they didn't connect and weren't saved by this person, they would fall down, not to their death, but into the safety net. And what if the first safety net didn't catch it because it was so powerful, this downward force, this downward price momentum? The next one would catch it. What if it was even more powerful? The one under it would catch it. Safety nets are really, really important. And when you do the CTKS method and you look at smart money buy areas below current price, they are safety nets. You can see how the safety nets catch momentum when it's coming down. And when it's coming down hard and fast, it's important to understand that a safety net can be broken through. But the more safety nets you have under price, the higher the likelihood of a big rebound up. This is hence why we look at the safety nets. We're trying to gain a direction on where price could go. If you see a lot of longs getting liquidated, the lower safety nets are coming into play, especially if you've got increasing numbers of longs. Eventually, they run out of steam. When you get up to, for example, 100% long, all the sellers have just exhausted all the longs and it will start to turn around. Therefore, you can start to see that the shorts are going to get liquidated. This favors the higher safety nets, but the higher safety nets, they're not safety nets, they're roofs. When it comes to upward price momentum, you can think of something like Super Mario Brothers. Little Mario is jumping. He wants to get through that ceiling. That's where the short liquidations will allow him to crash through that ceiling and go up to the next level and crash through again. But it's often not easy to get through ceilings. This is actually why when the shorts get liquidated, you can see that they can just tap an area and get rejected pretty much immediately. Zooming out, you can see smart money buy areas and smart money sell areas, and these are not formed from recent indicative price. They're formed from the totality of price history. Getting back to liquidations, another thing that you can do when you get an overall feeling, is the market going down? Is the market going up? Is the market going down? Would be answered, how many longs are getting liquidated? If you're seeing a very strong percentage up here, there's a very good chance that the longs are getting liquidated. What does that actually mean? When the longs buy in, they buy and they want to sell. When they get liquidated, they become forced sellers. This pushes the current market price down. Liquidation is always at market. When we looked at the depth chart yesterday, a long liquidation occurs at the current price. What happens when short sellers get liquidated? Shorts become forced buyers at market. They just push the price up. They have to cover. Now, why are we looking at this symbol liquidations? What about up here? What is that about? That can give us an understanding of what is moving or what has moved per time period. You can see I've got the 24-hour time period in here. We can pop it down to a 12-hour, a 4-hour, even a 1 hour, and we can see what is actually moving around. I quite like to look at the 24-hour period because it gives some sense to where the market is heading. Because we're all about seeking out to understand investor attention. So let's actually take these. One thing to consider, Bitcoin and Ethereum are the two most heavily traded cryptos out there. They'll always have very, very high liquidation values. So you kind of can ignore them because you can only fit 8 charts in to a TradingView 8-chart template. We can just transfer these in to an 8-chart view and we can see BNB. What does this actually mean? BNB coming up like this, well, there was a lot of weakness in BNB recently, and we know the weak become strong, and this is an illustration of that occurring. There was quite a wide gap between Bitcoin's gravity and BNB. may be pointing to the fact that the centralized exchanges were getting weak. We can see BNB is under a lot of buying pressure at the moment. There's been quite a few short liquidations in there. What about the next one, Solana? How's Solana going with Bitcoin's gravity? What this actually does is to give you a bit of a perspective, a longer term perspective on how those liquidation figures actually bear in to price movements inside those particular crypto projects. To get an understanding of how liquidations are playing out, we'll just go down to a 1 minute time frame. We can see BNB is really going for it. Even though Bitcoin is coming down, you would say, oh, they're decorrelated. There's a miss in correlation. What you're actually seeing is just an over-exaggeration of upward momentum. You can still see it's actually following Bitcoin's gravity. It may not look like it, and this throws a lot of people off. When you understand what Bitcoin is doing, and when you understand how the alts interrelate and interreact, wow, it's a special sauce inside the crypto market. We do see sign of inversion. What does inversion actually mean? It means that one is going down, the other one is going up. An inverter, a positive inverter, what does that mean? It means that there's investor attention here. That means it has our attention as well. Looking at the liquidations may actually give you a bit of an edge on what is potentially inverting, such as BNB. Is Solana inverting? No, Solana is weak. What about ARB? ARB has been stronger than Bitcoin. This is good. You want to look at strength, but just be aware as well. No alt can escape Bitcoin's gravity. As ARB was going up, also Bitcoin was going up. But notice what happened when Bitcoin, that blue line, came down. What happened to ARB? It came down as well. So you must pay attention to Bitcoin. What about Doge? Just moving in directional alignment at the moment. Ethereum Classic doing the same thing. Litecoin doing the same thing. Litecoin can become very light at times like this. It does tend to over-exaggerate Bitcoin's movement and momentum to both the upside and the downside. I suggest you keep your eye on it. We can see that Aptos just recently has become weaker. And what about ADA? ADA was just stunning. It was just doing so incredibly well. But we can see it's moving in alignment with Bitcoin's gravity, just a little bit weaker at the current time. A better way to visualize the longs and the shorts is to understand this is Bitcoin shorts and these are the Bitcoin longs. What do we actually see here? The number of Bitcoin margin shorts has been increasing over time. What about the number of longs? They're starting to turn around. This is creating a little bit of confusion. If you look at the mainstream media news, everything is doom and gloom. That's the way it always is in the news. Masterclass students, you get my live chart in TG34. What we actually do is just look at the charts. We know the news, we understand it. And if you were having a look at my Twitter, it was pretty much on fire yesterday, just pushing out all the different charts and all the different things that the market is focused on at the moment. And it's not pretty. But when you look inside the markets, you don't get caught into mainstream narratives. You can do really well. Remember, the herd is not the safe place to be. And we are a community of eagles, BORSOGing eagles. BORSOG is buy on red, sell on green. Please let me know if you know what rule number that is. I'd like to thank Shane and Tanya, who were very kind and generous and bought Kate and I a coffee on buymeacoffee.com/CryptoTradingKS. Shane says, "Keep up the great work, Ken and Kate. I really appreciate your time and effort in sharing your extensive knowledge. Thanks so much, Shane, and very generous of you too, my friend." And many thanks also to Tanya. Tanya said, "Many thanks, Ken and Kate, for everything you do for me, the KS family, and the world, every day, no matter what the day is, Sunday, public holiday, New Year, or honeymoon. I am wishing you lots of rest and a honeymoon every day." Wow, that's very beautiful. Thank you, Tanya. Very kind of you. Finding the market's focus and enhancing your pattern recognition is really, really important. This is the structure of the masterclass. As a global family, we're into mastery of emotional control, which is rule 734. How do we master emotional control? The first thing is to understand the price is always moving in a wave. If you know that rule number, please let me know in the comments. What we do is that we understand price can go against us or down. It can go neutral or it can go up. We know that we control the trade or investment, but it's the market that controls the returns, and the returns are always based on our active learning. And we're an active learning machine inside our beloved global family. The market does penalize blame and gambling, but it rewards knowledge and courage. Positive excellence is the home of courage. Many people, when they get into financial markets, they don't think about mindset. After you've been in financial markets for many, many decades, all you think about is mindset. We don't focus on money. We focus on courage. We focus on strength and boundaries, courage and honor, persistence and commitment, kindness, gratitude, happiness, inner and outer peace. Many people say they will be happy, fulfilled, and have meaning and success when they get ... Don't wait for the ... You already have it. Life is too short to be waiting. What you want is a feeling. Positive excellence is all about understanding that you can do anything you want, but so long as you do it with integrity and decency. Positive excellence is the rocket fuel for your life. When you focus on something that you really, really want to do, persistence and commitment become the core. And there were such phenomenal comments, and especially Al's comment when we were talking about what is important to you and how have you made that successful. Thank you, Al, so much. The markets can be incredibly volatile, and if we just come in here on the 5-minute view of Bitcoin, we can see that rejection up there. A lot of people were feeling a lot of FOMO as price was coming up. But what did we see? A retracement, a rejection. Why is this happening? Masterclass students, there's something on this chart that actually tells you why. Please let me know if you see it. If you're not sure what it might be, just use your classical training that we've done either inside the masterclass or just through the public channel to try and understand what is happening right now. It's actually very, very clear. I'll definitely review the answer tomorrow. I hope this episode has thrown a little bit more light on how you can look at derivatives to understand where price could potentially be going. If you have other topics that you would like me to cover off, please let me know in the comments. I'd love to hear from you. Wishing you a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.